and this on M1 is going to be a break of a structure again. So now, okay, I remember daily where we were in really big lows, and it was kind of accumulating. H4 turned bullish. Now M5 is turning bullish, momentum trendline, and now I have M1 following too. Okay, so now from that, this is a bunker block play. Okay, again, this is based on M5. So if you guys zoom in to M1, okay, probably the reason why the market exactly came to this level right there is because in M1, after the break of a structure right here, need to mitigate something. So look again, if you go down to M1, that's the entries that we like to get. Look how much you have reduced again your stop loss, all this level right there. Like for example, he did right here. That probably was like 1.5 pip stop loss on CAD JPY. Perfect. From here, this is another trade. This is GBP USD. Okay, this is a trade that we're gonna be going on today for sure. Full breakdown, so you guys can see exactly why is the reason we took it. This is actually, I'm still holding 30% of the volume of this trade. I think it's sitting in a 1 to 140. I've been holding this for 4 months. I know Wally took it with me too. Okay, so look, I will show you guys in a full breakdown later, but this was a M15 point of interest. Okay, so after that, we had a full accumulation in place. We had some sort of also equal lows, break of a structure in H1. We had our IFC candle, or FU candle in this case, that took out that liquidity. So now we had this point of interest to the future, and we were able to refine it to M15, and it was really clean. So we even reduced it a little bit. So when the market came like this, you will see it came like a complex pullback. And when the market came right to my M15, which is the one that we're going to be looking for right now, in M1, look how the market, okay, first of all, look how the market, lower high, lower low, perfect reaction, okay, lower high, lower low, perfect reaction, lower high, lower low, fail a little bit. Okay, so perfect. So now we are coming to my point of interest. But if we also see it like this way, look how the market is starting to accumulate when we are coming to this level of interest. So now when it comes, we focus on the reaction that the market gives inside these levels. So let me mark it in red. This level here is actually my last one. So always focus on the last one. Lower high, lower low. After that, what do we have? We have the market with some sort of intention, but it failed to create a new lower low. It's all the time the same, all the time the same. It fails to create a new lower low. So we fail to create a new lower low, okay? Not because I'm guessing, just because I'm watching the market failing and then creating this, let me put it in orange, this push to the upside that broke a structure right here. Okay, now I'm seeing the market changing momentum. So if you put some sort of trend line, momentum trend line, you see the market you're not gonna be playing the bounce of the trend line again. This is just something objective, subjective, whatever you want to call it, that we like to put in these levels just to see the market how momentum shifts after that break of a structure. Again, one of our smaller time from confirmations. Slightly, we had some sort of imbalance in this candle right there. That's our refined IFC candle. Okay, and from there, push to the upside and momentum shift. Okay, this is M1. Okay, once we did this, we see how the market did a healthy movement. If you guys see, everything here is healthy. We don't see any sort of imbalance. And then we see how the market here, how you see how the market right there did an unhealthy movement. Okay, so if now I see and I zoom out, okay, a little bit, this is M1, but if, let me erase a little bit right here. But if we zoom out, this is M1, but what's gonna be all this of this price action in the future, all this box in the future, okay, after this push to the upside, this is M1, probably this is a M5 or M15 break of a structure. So after the market create that push and momentum sweep, okay, now we know the market will also have to come lower on a M15. Okay, why? Because we left all that imbalance right there, and we know all this level right here is a demand zone. Okay, so after that, okay, that's a big demand zone, but after that, we don't have any level right here of imbalance. We just have it right there. Okay, so I remember we also played, because we were break even on this trade, the lower one. So we played again. We played 1% from there, and then every time we scale in, I like to scale out in percentage, so I don't have full risk on it. Okay, so again, this M5, being in M5, I think it was 7 pips stop loss, something like this. The market came perfectly right here, mitigating M5, and then from there flew to the upside. Again, this is something we'll do a full breakdown with the other time frames in a bit. Perfect. Again, this is M1, but based on a higher time frame, we're trending to the upside, to the downside. Sorry, we have some supply, some point of interest. What's another thing that we're gonna be looking for in terms of smaller time frame? Another confirmation is gonna be what a distribution one once it taps on our point of interest. So again, we have preliminary support, buying climax, UT, UTAT. I personally, in this case, won't play the UTAT just for the way I like to trade. Okay, so my application in Wyckoff will be, okay, this push created a higher high. Okay, so I'm looking this to fail. So I'm looking, I see, I know this can be a UTAT, but I like to see what's the reaction that it gives from there. Okay, when that happens, okay, myself on the application I like to do, instead of playing from the UTAT, okay, I know that if this point here fails to create a new high, this test then is valid on the distribution phase. And if that test leads on a break of a structure on a smaller time frame, I know that then we can be playing from my IFC candle right there, the last one. Okay, so now we're playing from the LPSY right there, but at the same time, I'm applying a structure onto the distribution phase, because I'm just watching the, okay, this is a distribution phase because this is a valid test, because we didn't create new highs. Our point of interest right there broke my structure right here. So this complex pullback, whatever you want to call it, failed to create a new high. So now I'm applying the distribution phase with a structure and then come lower. Again, of course, if we know this is a euro dollar, again, one of my favorite pairs, if you see this is probably a what? Euro dollar M1, this is probably a 2.5 pip stop loss, or even 2 pip or something like that. So just on the picture, let's say you want to just take this lows on an intraday, probably that's already a 1 to 7 trade, or 1 to 10. And that's why we always look for 1 to 10 on a minimum, because that way we can do, let's say, 1 to 10. And if the trade had some sort of target in 1 to 10, we can partial out and then leave the rest running. Okay, something really important is also with these entries, most likely you will achieve a 1 to 10 on an intraday basis. So that's huge on the way we trade. Again, all these drawings were from last day. Importance of market structure. Remember how we said this is M1. Again, H1 lower high, H1 lower low. Okay, when we know that, two ways the market can retrace: on a break of a structure and accumulation. Okay, just to do a small refresh on that. Okay, so I see some sort of accumulation or range, whatever you want to call it. But the way I like to apply this, when the spring happens and my break of a structure is done, after that is where I'm looking to apply structure with Wyckoff. Okay, now again, now I'm trading based on smaller time frame, but I know I will have to get out at certain levels. Probably this one, and probably the highest one, that one. Okay, that way I understand that this was the big push. So I'm trading this, probably getting even a 1 to 5 on a smaller time frame. But after that, look how the market distribute again, came, made our UTAT on a point of interest. Point of interest because all this imbalance right here, all this imbalance right there is sitting where? Is sitting on my supply zone, point of interest, or probably all this level is a IFC candle in a H4 or whatever time frame. Okay, so after that, we know we have that. We see the market point here, broke a structure right there. After that, IFC refined candle, stop loss. After that, this level here, new lower low. Now we want to take this low right here because the high probable scenario is, if we are trending to the downside, is this level right here to equal my new lower high. Okay, we come here, we take the lows, and we spike to the upside. So now we know this is a run of liquidity because the bodies didn't came lower. And after that, we also break a structure right here. So if I'm selling from here, okay, I'm speaking about lower time frame, also how to manage properly a trade in that sense here. So let's say we're selling from here. So you have a position here, you're selling, okay, and your target was just to take out those lows, okay. That was a 1 to 10, okay. 1 to 10. Let's say when that happens, you can do two things, okay. You partial out, let's say 50%, you make some money, but after that, what do you see? You see the market breaks a structure to the upside, and now you have an IFC candle right there. You can consider this as a what? A run of liquidity. Also, you have some levels of imbalance that you know the market could come to the upside. So now you're playing the buy, and because you partial out 50% on a 1 to 10, now you're hedging on a buy, and the hedge you're doing right now is gonna be free risk because probably this in case of taking the L. First of all, the 50% will cover the loss, but at the same time, you didn't close everything. So now you have 50% of the rest of the volume running. So if your buy fails, you know that still the sell entry will cover it, not even counting the 50% volume that you already took out. So now from there, you took the buy, this level creates a new high. So we see the market doing another thing, came right there on M1. So now what you're doing again, now you hold full volume, and now you are in the buys from here, and now you are in the buys from here and in the sells from here. So you don't care what the market does, you have the market trapped in two levels. So wherever the market breaks to the upside, now you'll be making money. Okay,
Alex,
this is yeah.
can you check it in the waiting room if someone's waiting?
Yeah. No.
Someone's been calling me on Instagram telling me that they can't get in.
Okay, while you chat with him, I'm gonna check the chat because I see a lot of messages. Okay, so again, something really important. I used to, and I'm really used to it, but I used to do breakdowns of or watch lists, whatever you wanna call it, of more than 12 pairs a week for a long time. The reason why I stopped doing that is because I noticed that I was missing a lot of trades, because now I monitor M1, and I noticed that just literally just with euro dollar and 2-3 more pairs that I monitor, and I can catch a nice banger, that will be a 1 to 30, 1 to 10, 1 to 20 on an intraday. So actually that's something that maybe you guys can check out. Probably if you're starting, better not to have like 10 pairs, because the way we trade, you guys already see that we can actually get really, really good trades just on one pair, and probably your month or even week can be done on a morning. Yeah, Melvin, the difference between bunker block and the IFC candle is, let me, I know we're doing a smaller time frame, but just to clarify what we, okay, the difference is just, okay, you have an IFC candle right here, okay? So let's say that IFC candle is based on M15, just to say something. Okay, now M15 has a point of interest. Okay, blue. Okay, so now the market comes. Breaks the structure. Okay, if you're taking it from the IFC candle, it's gonna be this your entry and that your stop loss, right? So when we do it from the bunker block, is just the reaction from a proper IFC candle. So that will be from there to the downside. Okay, so a bunker block is just that. It's just taking the IFC candle that has just made a reaction from the previous one. Let me get back to the chart really quick. The difference between FU candle and IFC is FU candle always takes out liquidity, being equal highs and equal lows. How many pairs do you trade, Alex? Again, mainly dollar pairs, but I would say I have a watch list of 3 to 5. I don't need more than that. Okay, all examples in how to backtest and everything, we'll do that later, so we don't break the flow of it. Okay, so can you guys put me in the chat if everything is making sense in the blog? Again, this is a refreshing as we did already the blog on the previous day. Yes, awesome, good stuff, perfect. Yeah, probably this is the second time that you guys are seeing it, so probably it's clicking a little bit more.